I hope you guys took some notes. That was good information. Our next guest speaker, by the way, Philip, thank you very much. Thank you. Our next speaker is Annemaria Allen. She's president of the Compliance Group. Annemaria has an extensive 20-year background in the mortgage lending industry and has worked for several large financial institutions as compliance manager and mortgage banking. She is a member of the MBA, CMBA, and has chaired the Sub-Compliance Committee of the Mortgage Quality Assurance and Compliance Committee. Annemaria?
Okay. Well, I'm honored to be here. A little nervous, I must say, but I also lost a mother to cancer, so this was very exciting for me to be here, so thank you very much. Let's see. Which button do I push? Oh, did I? Okay. Here we go. I'm going to try to keep this as positive as possible. I'm actually a compliance officer, and we tend to talk more to the negative than the positive. So when our clients hire us, we never really come with good news. I am here representing the California Mortgage Bankers Association, and so I'm here on behalf of the mortgage industry. And I was glad that everybody was finished with their dinner because I didn't want tomatoes or anything thrown at me. But the lending industry yesterday, I kind of wanted to talk about the lending industry yesterday, today, and tomorrow. And basically, the lending industry yesterday, in my mind, was unsophisticated borrowers, unsound loan programs, subprime, no income, no asset, greedy industry, greedy borrowers, unsound business practices, minimal internal compliance standards, minimal internal safety and soundness quality control reviews, and untrained regulators, and overinflated property values. Sounds fun, huh? So I thought, well, with this presentation, I thought I'd add a little humor to it. This kind of says it all. This banker says, let's see if I have this straight. You want a home equity loan to help pay for a backpack, Lucky Brand jeans, and tennis shoes. Now, I have to say, I have a dog, and probably most of you do. My dog's igloo out in our backyard appraised for higher value than my house. So this dog says, where I come from, it's called collateral, and he has a big bone on the table. Lending today, basically I'm talking from a compliance standpoint on mortgage lending and brokering, and even from a bank industry. Basically, there's been a complete overhaul of loan programs. They've made it harder for just any borrower to qualify. Lending has somewhat stabilized due to new laws enacted, so I'm seeing stabilization in lending, but that's basically because subprime has gone away. We're back to a full document type of scenario, and I call that back to the basics of underwriting. Back in the 80s when I started, we did full underwriting of everything, and that's what we're coming back to. I've seen over the past probably 5 years where we were really doing a lot of automated underwriting, and while automated underwriting is still around, we're getting back to really looking at the file and underwriting that file for income, assets, and so forth. I feel the affordability index has moved to a more attainable price for borrowers, but it's still not quite there. I see a lot of inflated prices in the homes still. We haven't seen the worst of it, and I think as the panelists prior to me have also indicated the same thing, I see that within the next year we still have a ton of adjustable rate mortgages that are going to be resetting. Of course, I have to have another cartoon. This one says, well, I think everything is in order. Congratulations on your new home, and the children are in a wheelbarrow. Lending today still. There are a large amount of legislative changes. We have Hera, which is the Housing and Economic Recovery Act, which Bush just signed into effect the end of July. And basically, I outlined about 4 different bullets. FHA refinance voluntary program, which is a hope for now for homeowners. It seems to be, and I'll have to admit that this is a 636-page document that has just been passed into law, and I haven't been made myself familiar with it. So, but it appears that the FHA, the Hope for Now Homeowners Program, is going to be a pretty good program, although I have heard that even though it's a voluntary program, it may not be as voluntary as one would expect. There's going to be servicer fiduciary duty on loss mitigation, foreclosure protection, and a whole lot more. We can also see what's called the SAFE Act that just got passed several days ago, and that is the Secure and Fair Enforcement for Mortgage Licensing Act of 2008. Basically, this act has come into effect to protect consumers seeking mortgage loans and ensure the mortgage lending industry is operating without unfair, deceptive, and fraudulent practices on the part of mortgage loan originators. Basically, I'm not sure if you're familiar, but there is a new system out there called the National Mortgage Licensing System, and all lenders and brokers and loan originators will have to register through this system, and this is part of this whole system. So it is going to make loan originators, lenders, and brokers part of this whole system, and all the states will be speaking to each other, and it's going to keep people honest. There's also been an amendment to Regulation Z, which goes into effect 10/1 of '09. Unfortunately, it means more disclosures to consumers, just what we need. Higher priced mortgage loans, there's a category in there for higher priced mortgage loans. It's supposed to capture all subprime loans. It's supposed to capture a portion of Alt-A loans and generally exclude loans in the prime market. There's also additional advertising restrictions, and there's different ways of calculating the APR to the index as well. So with that, you're going to have to disclose more. With those good news, I had to add another comic. 6% loans. You're part of the 6% we won't be lending money to. Lending today continued. Many state law changes. Just in California alone, we have 30 bills that are in the legislature. Some have just passed with emergency laws going into effect, mainly for foreclosure prevention laws. A lot of the states, we do nationwide compliance, so a lot of the states are passing also foreclosure prevention laws, loan modification laws, servicing laws, and the states have passed what's called the non-traditional mortgage guideline, and every lender and broker is required to adopt these guidelines if they are lending on ARM products. I kind of feel this is too little too late, but the way I look at it, this will never happen again. They are telling me my time is up. The last comic that I have here is there anything we can do to repay you other than to repay you? And I do want to just, part of this was the solutions, because we were told to talk about the solutions, so I feel like I've been doom and gloom up here. And I just want to add, I think the biggest solutions for the coming up years is consumer education. We have to get the consumers out there and educated. It is extremely important. And we also have to be aware of fraud and preventing it. And the lending industry as a whole needs to be informed and well-trained also. And we need stronger compliance standards, stronger safety and soundness assessments, and laws that will be in place now, I think will help from all of this happening in the future. Thank you.